Hello friends, this is Martin from Secrets channel for learning about trading and investing. Welcome to a brand new episode of Markets Next Week, and this is analysis for the week that's starting from August 29th tomorrow 2022. So we will look at what happened in the market during the last week and how we can plan for a better trade for the next day. We'll be looking at Nifty, Banknifty, option strategies, stock picks and all of that, and we will come out with a wrap-up market view also for the next week. Let's get to the charts. This is a weekly chart that you're seeing for the Nifty and the Banknifty. Left side Nifty, you can see that it's a hammer pattern. It's a bearish move that has happened last week, but the support is evident from the wick size. Banknifty also, look at the wick size. Look at the bounce up that has happened. It's not a hammer, but a small body. But a similar kind of price actions would happen on the weekly basis, right? So there is a change in polarity opportunity there, right? It's a previous resistance, which could act as support and bounce from here. That's still possible. Daily, what does it say? It's clear consolidation and inverse flag pattern may be visible, which could be indicating some more downfall. A lot of supports are there. Gaps are all taken, but resistances are all previous swings on the previous lows, or the supports on the downside, right? So it's an inside bar on the Friday closing inside the larger candle. And again, the Nifty also inside bar. Inside bar indicates consolidation. That's exactly what the Bollinger Bands are indicating. You can see that the price expansion on the Bollinger Bands has closed, means is no longer there, and then it has contracting, right? So it's sideways price action that is indicated in the Banknifty as well. Another view is it's a famous trendline channel that we have been talking about. We were anticipating earlier this week that on the daily analysis whether this close of the candle would be inside or outside, and finally the weekly candle has closed inside the trendline channel, and it is, bearish in nature, and you can see that this momentum also has slightly slipped. Banknifty right side, you can see it's broken out and it's managed to close above with a green close. So, but Nifty is relatively weak and showing that there is a possibility of consolidation, whether this moving average would actually support is what we have to see. Look at the support resistance levels for the Nifty, Banknifty. So all of this PSL is the previous swing high, PSH is the previous swing high, ATH is the all-time high. Gap is support, gap support, and that's all what you see there. So right now it's close to the 17,500, 600 that zone. It's consolidating there. The first resistance that you can see is 17,725. Right, that zone has got resistance, the previous swing high, and after that on the upside he has near to 18,000, 17,992 kind of place is the previous swing high. That's above that you have 18,000, 18,100, 200, and then previous swing high of 18,369. 18,115 is the previous swing high, which is resistance upside. Downside, the first support could be seen at 17,490, 17,500 could be a first support you could look for, then 350, 17,350 zones, and that's the previous swing low levels, right? If that's breached, then 7,200, 300 can see support, and then 17,000, 7,050, and then there is a gap support, which is coming near to 17,000, 16,950, to be precise, right? So that's the expected support and resistance levels for the next week. For the Nifty, Banknifty, you can see similarly there is a consolidation happening. Right now it is at these 38,900, 39,000 kind of zone. First support would be seen at 38,800 if that's breached. 38,800 is the previous swing low. So 38,350, 38,600 is a Fibonacci 50 retracement level as well. So 38,000 is the support next. Then that's also a previous swing low nearby. 37,700, 37,800 is also a support below. Likewise, the strongest support can be seen at this gap resistance. That's 36,800, 37,000 Fibonacci 638 also. So that level will be the best support that you can see. But the first will be 37,950. 38,000 would be a very good support, which is the near previous swing low. Similarly, the upside, the first resistance can be 39,759. That's the resistance on the upside, previous swing high. Then you have 41,60, which is the previous swing high. So those are two resistance on the upside. Right, so that's Banknifty. Make a note of these levels. It's very crucial for you to decide on how the market is moving, sideways, upwards, or downwards. Right. Momentum, the price momentum and the trend is what we are looking at next now. Right now, what do you see here? Right side, you can see that the momentum is just on the edge of more bullishness. RSI 60, if you consider, you don't have to be that specific 60. Little 1 or 2 points down or up is okay always when you're looking at the charts, right? So it's actually facing some pressure of maintaining the RSI momentum at the bullish zone. So, but you can say it's still maintaining on the weekly and the mid and daily charts. Nifty, Banknifty also is trying to hold on to the momentum. It is little more strong than the Nifty from the momentum perspective. It's trying to maintain the RSI 60 momentum on the medium and the short-term charts. But the trend indicator that you see below here, the ADX indicator, is also bullish in nature, except that it is, it's falling, right? You can see that the ADX strength is falling, right? Although it manages to be in the DMI positive zones on the ADX indication, the ADX strength indicator is falling on both indices, on both the time frames for Nifty and the Banknifty, both indices, right? Something else. So overall, it's on the edge. Momentum and trend is on the edge of maintaining the bullishness, you can say, right? Anytime it could fall up or or become more strong. Anything could happen, right? That's what it indicates. Moving on, volatility, if you see, it was a flat volatile week below the 20-day model. 18.2 and is what happened, but very close to 20. So we have to be cautious about that if you're trading instruments like options and derivatives, etc. Right? Options interest, open interest data. The OI data is on the futures, is showing that it is kind of long build-up that happened on Friday on both indices. September weekly levels, we'll be looking at the next slide here. But before that, the put-call ratio is not bullish at all. It's quite far from the 1. It's 0.73 and 0.67 Nifty and so PCR is options data is not showing. It's also sideways. We can't say it's bearish, but option data is concurring with what the price patterns and what Bollinger Bands are showing. Right? So levels, if you see, the has put writing descent 17,000 and then 17,700 is where the higher resistance is seen on Nifty. 39,000 and 39,500 is where the highest put and call writing is on the Bank Nifty. Second highest would be 17,500, 18,000, 38,000 and 40,000, right? PCRs are not bullish but not bearish either, right? Long built up. So futures wise, Friday's action is positive. So that's volatility. Volatility could be very much because market on the next week, beginning at least, right? Although it's a sideways price action, what's indicating Monday's volatility could be very high because of the reaction to the outcome of the Jackson event, right? We'll look at that, how the US market will from the coming slides. But before that, the sectorial watch, if you see, it was kind of mixed back, bearish movement happened across the sector. So the only sector right now that is bullish on the short term from the perspective is metal, right? Auto and the FMCG, which is the moving two sectors for some period of time, for several months, in fact, has now slipped to the sideways on the short term. But medium term, it still maintains that. So that means the sideways momentum on the short term can climb back. So auto and FMCG is still strong, but metal is the only one that is showing clear bullishness on the short term. But the thing is, auto and FMCG are strong in the medium term also, but metal is not. So short term perspective, metal looks fine. Auto and pharma also looks fine, although it has slightly slipped down, right? And the medium term, auto and FMCG still looks fine. So last week's price action, if you see, IT sector went down, right? Auto sector went down, pharma went down, FMCG went down. Only reality and the metal closed slightly up. They're too flat, less than 0.5% kind of up move is what happened, right? So stay away from the sectors which are not working, right? Not having momentum. Stay away from IT, stay away from pharma, right? And look at what metal, auto, and FMCG and reality is doing, and then that's how we have to play it, right? But as of now, there is no indication, clear indication on on going long at all on any of the sectors. So none of these stocks are strongly bullish as of now, right? On the short term and the medium term, if you combine and see. This is what it says, right? Look at this. We had a very bearish movement, 4% down on the IT. We had metal doing good with the hammer. Momentum is on the edge of resistance zone of RSI 60, not in the bullish. What was doing good, but last week it had a pull down and then closed below the previous candle. Pharma was doing down anyway, it just further went down. FMCG was doing good, but it's kind of facing resistance, but still on the bullish zones on the medium term. Reality also bullish on the medium term. It is doing okay, but we have the hurdle of the RSI 60 to be close to get in the bullish zone. So that's sectoral things. And the index heavyweights, how did they do? The HDFC Bank went down. It is facing resistance at the RSI, and this bend on the RSI momentum shows that there is bearishness ahead. But overall sideways movement that is happening. Remember, we had a good reversal along with how the indices went. HDFC Bank also went reverse and went upside, but we have a lot of resistance on the upside at 1545, so 1550 kind of levels. HDFC also managed to climb on the top of a resistance zone, but bearish movement is what happened last week. Sideways movement is what we have. Lens, yeah, it's also moving sideways, not making any big up moves. It reversed, but facing selling pressure at the point. Index heavyweights further. If you see, Infosys is also feeling the heat. IT sector as such is going down, and look at this. It is unable to hold the gap resistance which it had overcome, and then fallen down with the white range bearish candle. Sideways movement is maintained, but TC is also white range bearish candle, unable to hold on the support zones, and then slip down further into the sideways downside towards the support of the momentum. HDFC Bank was bullish, and it somehow maintains that. The most bullish among the heavyweights we can say is HDFC Bank. Kotak Bank has been zigzagging in this range. It's range bound, and once again it is at the top of the resistance zone. So I don't know whether it's going to further go up or finish with what up move has happened and then go downside. It's no indication. But as of now, momentum is rising in the sideways zone, and a good green move. The reversal continues. Some strength is seen in the Kotak Bank, but ICICI is the strongest. Others are all managed to maintain themselves in the sideways zone. That's all. From the momentum perspective, right? So moving on, institutional participation. If you see, Fyers are not into the selling mode yet. 450 crores net buyers there, more than DIs, which are 500 crores of net sellers last week. Net longs on the derivatives also by the FIDA is down last week, right? So there is some kind of sideways bearish move. Participation, wait and watch kind of thing is what is saying, but at least they're not selling big Fyers, right? So the market may be consolidation, what the indication is given by the institutions. Never know. Global markets, if you use markets, look at this, right? This is a Friday, last week's movement is like, it's a 4.5% of downfall, slipping from the major support zone is what you see on the Dow Jones. And look at Nasdaq, similar for 5%. S&P 500 is an index that is also fallen down 5%. So 3 to 5% of downfall in the US markets has happened. The Jackson Hole meeting is happening today also, I believe. So our markets will get to react to that. Nifty will get to react to this downfall only on Monday, and that's most likely to be bearish nature, right? Dollar index, if you see it spiking up, it's spiking up to the all-time high, 20-year high levels, and it had in fact gone to the 109 levels also last week sometime. So dollar is rising, and USD/INR rupee is weakened to the lowest 79.91 is the rupee value, right? And it is spiking up to the all-time high levels. USD/INR also very close to the 80 rupees per dollar, right? Crude oil also is spiking up back above the 92 points and 93 kind of levels, 3.5% up. So crude is rising, rupee is weakening, dollar is rising, and gold is also falling 0.6% now. And the US markets indices are making 5% kind of downfalls last week. So overall, next week does not look very bullish. It could be bearish. It could be bearish with some sideways zone. So the question gets answered here, right? Look in the global cues. If our markets are going to follow that, things are not nice. Look at this crude. It's on the bottom. It's at the support zone. It's not ready to fall further down, and then consolidating there, and not able to maintain the below 90. But at least 100 is okay. Momentum is also the support zone. Gold is unable to hold on to the support zone in the medium term, and on the edge of the support zone in the momentum, and about to slip into the bearish zones in the momentum. So gold is remembered as having a couple handles. So belly slow moving in. It will be consolidating for years and years like that. Already 2 years it has been doing the same. Two stocks for the next week. Aditya Birla Fashion, it's a cup and handle breakout. The handle part is done. It's a trend line channel, and beautiful breakout is confirmed. Now you may take the trade above this candle high, and then could be good risk reward trade for swing and positional opportunities, right? it's Aditya Birla Fashion. Second one is NTPC, the National Thermal Power, and it's a trend line channel breakout. It has happened, a lot of space on the trend line top, likely to move up further. Any entry above the previous candle's high, all-time high, any of that could work out. Right? Put tight stop losses below the entry candle's bottom. Momentum is high, trend is high on both. NTPC is a 51% Government of India company. So Aditya Birla Fashion and NTPC are the two stock picks for the next week. Right? The Nifty Strategy on the options trading is again another double diagonal cluster spread where we are sitting two. We are selling the required quantities of lots as per your capacity, capital, right? Put side and the call side, right? And then for the next expiry, weekly expiry, and then the far one the expiry has to be bought to benefit from the Vega. So it gives a very good range as I had been selling. Look at this range. So as long as we are within this 17,150 and very close to the 18,000, if that kind of price action is not expected for the next week, right? Even if it falls, it won't fall below near to the 17,100 is what we can anticipate based on the VIX or VIX based calculation of the levels or ATR based calculation of the levels. So it's not likely to move that much, right? Even if it moves, we can roll up and roll down depending on which side it is being tested. So the risk reward is also fairly enough as long as you don't hold on to the last day. Exit when you're getting 2-3%. That's it. Consistently make profit from this strategy. Right? So double diagonal calendar spread. If it is completely hedged, so there is less requirement for the margin also to trade. The lot size depends on how much capacity you can scale it to any level. Right? Basically, it gives a very good range in probability of trade and a reasonable consistent profit of 2 to 3% a week, right? So wrap up, right? So we have seen 3 to 4% of retracement on the indices after 18 to 23% of rally that has happened. Now it is consolidating, quite natural from the chart wise. Technically, if you see, it's quite natural. The only question is, so the major question was whether the channel, the close is happening inside the channel or outside the channel. The weekly candle of the Nifty just close inside, so it's close with the hammer. Hammer often indicates a reversal. Since it's not exactly on the top of the channel, we don't know whether it's a reversal towards the downside or reversal to the upside. No. But anyway, that support at the downside is indicated by the channel's wick, the candlestick's wick on the weekly. But how long it will retrace? Will it fall down to the bottom and make another swing low? We don't know. Or will it take it momentum support? Plenty of supports that's the downside is what we are going to look at, right? So overall, I have moderate bearishness. Now, also considering the FI data is not encouraging FIs for buying very little. Bollinger Bands clearly indicating there is no up move, there is sideways action that is going to happen. Right? So moderate bearishness, my opinion. When US market, that's the main thing. It is shown heavy bearishness. 1,000 points in Dow and home markets has to react for that Monday. So Monday definitely is going to be down. Right? So global goods are not the treat. There is inflation, Fed interest, repo rate, US war, China war. All these things are happening, and the crude oil is rising, while the dollar also is rising, and rupee is the weakest. So there is uncertainty all around. Spikes can come, and in the VIX can move up, to any level. So keep a watch on all this, and be cautious on going long. So definitely no scope for going long unless there is a clear indication. Downside, you can play short if the levels are breached. Each time a level is breached, you can take portions. Right? Now these levels, there are interim levels between these two on the upside and the downside, which you have to watch, which was mentioned in the support and resistance slides earlier. So watch out for that. Ignore these levels. These are all the interim levels below that. Look, so that would give an indication on when you have to exit, enter, and all that, right? So always, as I say, go for hedged strategies where you know what exactly you lose in case your view goes wrong. Right? Go for covered calls, or cash circle puts and that kind of option strategies to hedge your positions, not just your positions, hedge your high quality investment stocks, right? To protect that, you can play the options. So we have discussed all these in the options. In the playlist, you can see how we can, in the option strategies videos, if you watch, you'll understand how you can protect your long-term investment by using the options. You can hedge your strategies and be, completely out of losing your entire capital. Right? So how this can be done, there are a lot of videos made on that. Apart from this daily and weekly analysis, we have videos. Go to the playlist and then click on that, and then you'll find it there. I hope this helps you to frame your view for the next week, and if it helps you some way, definitely like, put in your comments, feedback if you have anything, and also share and subscribe if you're not subscribed. We have very few subscriptions in spite of the effort, so to keep us motivated, please subscribe and share it to others and ask them to subscribe. Thanks for watching. Happy learning, happy trading, happy investing. Bye.